Acha, let's start off with cash flow from investing activities. I've told you earlier that if there is income tax paid will be deducted and you will get the net cash from or used in operating activities, this will be getting. This video I will tell you actually cash flow from investing activities and cash flow from financing activities. First of all, what do you mean by investing activities and what is the meaning of financing activities? First I'm coming with investing activities. In investing activities, every purchase will be deducted, means will be having a negative figure. Every sale will be having a positive figure. Achha, which kind of purchase and which kind of sale will come? Sale of fixed asset, purchase of fixed asset, sale of investment, purchase of investment. Only these 4 types of things will come. Another, dividend received and interest received, this will come here too. This will add here. Dividend received and interest received, this will be added here. Okay. So I told you earlier that dividend received and interest received both will be deducted in the operating activities as non-operating income. Those dividend received and interest received, the same amount of that interest received and dividend received will be added here. There it will be deducted, here it will be added. In operating activities, it will be deducted as non-operating income, and in investing activities, it will be added as normal investing income. These two will be these things: rent income, interest and dividend received. These 2 things. Okay. So how to get this purchase of fixed asset and sale of fixed asset? Suppose I'm saying there is a furniture account. Okay. So if there is a furniture account, what is the opening balance? To balance BD. Suppose 40,000. Buy balance CD, there is 60,000. So in 2 sides I have 40,000. In buy side I have 60,000. Suppose there is additional information, depreciation is charged 10,000. Okay. So 2 side 20,000. Buy balance CD 40,000. There is a depreciation charge in the furniture account. I will write down by depreciation 10,000. So in the credit side I have 50,000. In the debit side I have 20,000. So what is the balancing figure in the debit side? 30,000. That will be called 2 bank account. The balancing figure will be called 2 bank account. 2 bank means purchase of fixed asset. That balancing figure, what I've got from that furniture account, that is purchase of fixed assets or purchase of furniture. It may come in the buy side too. It may come. Maybe it will be coming as buy bank. Then that will be called sale of fixed asset. So purchase of fixed asset and sale of fixed asset might have been given any one of these 2. Like maybe sale has given. So you have calculated the missing figure of the purchase. Maybe purchase has given. Purchase has given. You have calculated the missing figure of the sale. Maybe you have calculated the missing figure of depreciation. Anything can be calculated by you. It depends on the information which will be given in the additional information. And after putting all the additional information, you need to find out that which missing figure needed to be placed upon to that particular account, whether that is depreciation, that is sale, or that is purchase. So if there is a buy bank figure, that is sale of fixed asset. If there is a 2 bank figure, that is purchase of fixed asset. If there is buy depreciation, that is only the depreciation. So this is how we will find these things: proceed from sale of fixed asset, proceed from sale of investment. Another thing is that suppose nothing is mentioned. Investment, there is no additional information. Suppose opening balance 20,000 and closing balance is 10,000. So there is 10,000 decreasing. So that is called sale of increase, sale of investment. Suppose in the opening balance 20,000, closing balance 50,000. There is a 30,000 increase. That is purchase of investment. Purchase will be treated as a negative figure. Sale will be treated as a positive figure here. Okay. So this is all about cash flow from investing activities. We will discuss this much more in a bigger way when we will do the sum. But while in investing activities, we need to follow up only these stages. And we will find this kind of figures from the accounts which we will draw in the workings. Okay. Next I'm coming with cash flow from financing activities. Okay. So what is the meaning of cash flow from financing activities? Financing activities relates with capital, loan, etc. Now, there are two ways of using this capital. One is issue, another is repayment. Repayment means redemption. Redemption means you are paying the money. And issue means you are getting the money. Okay, so all issue will be added, all repayment will be deducted. All repayment are negative figure, or issue are positive figure. Suppose there is equity share capital and or debenture. Opening balance is 1 lakh, closing balance is 1,50,000. So there is issue of debenture or issue of shares. Means it is increasing. Whenever there is an increase, that is issue. Whenever there is a decrease, that is repayment. Suppose debentures opening balance is 50,000, closing balance is 20,000. So you have repaid 30,000 amount of debentures. So you need to write down repayment of debenture negative 30,000. And you need to mention if there are two things which will be also deducted. One is interest paid, another is final dividend paid. These two things. So interest paid, you have already told you, interest paid has two effects. One, interest paid will be added in the operating activities as non-operating expenses. The same amount will be deducted as interest and debenture on loan paid. Same thing is called final dividend. What is called final dividend paid? I've told you you need to open a proposed dividend account. There is a by PL figure, there is a two bank figure. If nothing is mentioned, closing will be by PL, opening will be two bank. By PL figure has come or has added in the first step of operating activities, and the two bank figure you need to write down here, and that will be also in a negative manner. Means you need to deduct this amount. That is final dividend paid. So I've told you earlier, proposed provision for tax and proposed dividend, you need to open these two accounts. In proposed dividend there is one by PL, another is two bank. By PL means the amount charged. Whenever you are actually doing the operating activities, you are actually adding the proposed dividend amount, the by PL part, in that operating activities. Whenever you are doing financing activities, dividend paid will be retained, which will be two bank. The two bank amount which will be deducted in financing activities. So after doing all of this, you will get cash flow from financing activities. So you have three items now: operating, investing, and financing. If we denote operating as A, investing as B, and financing as C, then we need to do A plus B plus C. Means we need to add all these activities. Okay, the final amount of all these activities will be added to get the cash and cash equivalents during the year. Net increase or decrease in the cash and cash equivalents, that I will get after adding all these three items or three parts. Okay, so whenever we are getting this, you need to just add the cash and cash equivalents at the beginning of the year. The cash and the cash equivalents at the beginning of the year. Where we will find it? We will find it in the balance sheet. The opening balance of cash and bank, that both will be added here. And you will get the closing balance. You will get the closing balance after adding with these cash and cash equivalents. So what is the matter? How to check that whether the cash flow sum is quite good, or whether the cash flow sum is matched or not? How to check that? I've told you earlier, the cash in hand, there should be in the balance sheet. The opening balance is also there. The closing balance is also there. Okay, so whenever you have net increase or decrease in cash and cash equivalents, you just add cash and cash equivalents at the beginning of the year, you will get the closing balance. If the closing balance is matched with the sum, then your answer is correct. If the closing balance is not matched, then the answer is not correct. So what is the thing I've told you earlier? Cash flow is usually done only for adjusting the cash balances, nothing else. Only you need to record all the transactions relating with cash, and whatever cash which are flown in or which are flown out. So that you just need to put down. And whenever you are doing the add less part, means whatever is coming in, you are just doing the add, and whatever is going out, you just need to deduct. Okay. So after doing this addition and deduction, whatever the net increase or decrease you are getting, mean net difference of receipt and payment, with that amount, if you add the opening balance, you will get the closing balance of cash. And if the closing balance is matched, then the sum is correct. That's all about. Thank you.